right, let's welcome in our next guest, Mish Schneider, Director, Trading Education and Research at MarketGauge.com. Mish, good to see you. I haven't spoken to you in a while. Are we in a bull run? What's going on here?
Well, hey, Nicole, I'm really happy to see you too. Well, yeah, I mean, we could say we're in a bull run. I don't necessarily like the 20% as the definition of a bear market or a bull market, because I like to look other parameters when we zoom out a little bit. And right now, zooming out, obviously everything looks great, but there are still a few concerns in the market. I know I've heard you touch upon it, but it would be the things that Druckenmiller once called the inside sectors of the economy, right? Retail, transportation, and the small caps, and they're doing better, but they're certainly not looking like we're seeing in the NASDAQ and the SPY. So I think we still have a little bit of a waiting game before we can declare bull.
I see. And I guess at this point now, it's also what you pick, what you like, and looking for valuation. So on the tech side, some names have run up a lot. Maybe they have further to go. Maybe some still have more upside, or maybe seem a little more like value. Tell me about the names that you like. I know Meta, Broadcom, NVIDIA are names you're watching closely. Are you buying them here, waiting for pullbacks?
Well, we've been in all of those stocks for a while now. We're actually at the point of partial positions because we've taken profits along the way. And sometimes, you have those tails. Could be the things that really go parabolic. I think particularly if you look at NVIDIA, you had a really nice gap up after the last earnings. That now becomes your central base in this period of consolidation. But yeah, I mean, certainly they can continue to go up. But we've seen, going back to my other point, other periods of time, like the end of 2021, for example, into 2022, where NASDAQ was rallying, SPY was rallying, and the Russells and even the regional banks started to turn over first. And so that's why I always have close eyes there.
All right. And then turn your attention over to commodities. What are you thinking there?
Well, you guys have been talking, of course, and should be talking a lot about EVs, right? Tesla, its 12-day spectacular rally, some of the other EV companies. And so I think about all this stuff, and AI and semiconductor chips. And these things don't just come out of thin air. They run on raw materials. So I think some of those raw materials have been incredibly undervalued if we're going to sustain these levels in the market. Lithium being probably number one, but also even like Cleveland Cliff Mines or Mosaic, which is more fertilizer, things that actually make things so that we can use the AI, so we can run our EV batteries. And so this is really where I think there's a great opportunity right now. And we've been adding some of these sort of basic materials, I guess we can call them, into our portfolio.
And I see some up here. Are these the ones you actually like, or is this just sort of a group of names? I mean, which ones do you actually like?
Well, I can tell you that we're in 3 of the 4. We were in Mosaic, okay. We got out, but we're in silver, okay. Cleveland Cliffs, and lithium.
Yeah. And then let's turn our attention to going abroad. VNM, international opportunities. We know international has actually outperformed U.S. stocks in many ways. Now what? Is there still room there?
Well, what's so interesting about Vietnam is that it's a manufacturing country. So if we're talking about getting out of the doldrums in terms of economic contraction, and I'm dubious on this, but if inflation is going to cool further, Vietnam is such a great place to look, because if you look at a graph of how much we are importing from China versus Vietnam, China's come down, Vietnam's come up. And U.S. is just one example. Vietnam is really thriving in terms of its capabilities for manufacturing for lots of reasons, labor being a part of it. And so right now, that's just come out of a base. Looking at the chart you have up there, you can go back and see that we've cleared all of the work. And now it looks like this is an ETF that could easily go up much higher from here. So, yeah, we like that. We like that as probably our favorite emerging market right now.
Oh, okay. I mean, and the truth is it hasn't done exception. I mean, it's done. Look, anybody would take 12% year to date. I think that's great. I don't I love, if you can give me 12% every year, I'll take it. But, you know, it sort of pales in comparison when we start talking about names that are up 100%, or some of these cruise lines we were just talking about 80%. But you still think there's room there for the Vietnam ETF. What about the Fed meeting, and why does it matter to you, if at all?
Well, of course it has to matter, right? But it doesn't really matter to me as much as, let's say, some of the other meetings we've had. I think I've been saying this for a while, and now I'm seeing it's become quite popular where it wasn't popular a few weeks ago, and that is either the skip or the pause. And it makes total sense. I mean, just from a logical standpoint, why would they raise right now? I know we have CPI, PPI coming up, but even that, looking back, looks like it at least won't go up very much if it goes up at all. So the Fed to me right now is kind of maxed out, and now they're going to be in a wait and see. And that's why I think inflation as a back burner thing is dangerous. We've got a lot of stuff going on right now between a possible strike on the West Coast, the fires, and affecting certain resources in Canada. We have still situations here with drought in certain areas. We have high global inflation. Supply chain is at threat even with Russia-Ukraine, even though Ukraine right now is had a good striking blows at Russia. So I wouldn't turn my back on it. And the Fed pausing, to me, only adds to that possibility that inflation comes back to haunt us in the second half of the year.
Yeah, absolutely. All right. So, I mean, in a year or two from now, are you feeling like the bull market will be taking off and we will have forgotten all about recession and everything else?
Well, it seems like we've already forgotten about recession, which is great because really the economy has more stagnated at this point. It seems like all the bad news has thrown. But I think that's really going to be a question as what happens with inflation. You know, this inflation is all just goes away. It doesn't make sense. So if that comes back, and I think it would certainly have an impediment to any major recovery.
Yeah. Look, there's still a talk about a mild, quick recession. I mean, Brian Moynihan of Bank of America, I listened to an interview of his, and he's still expecting it here in this back half of this year. So hopefully it'll be mild and quick. Mish Schneider, good to see you. MarketGauge.com. Thank you.